Okay, so you're just getting started in trading and you don't have too much money to put into your Forex account. You have a small trading account, but you want to know how you can grow this account and actually make real money trading Forex without needing $10,000, $20,000, even $100,000. Well, in this video, we're going to actually go over the secret to growing a small trading account and how you can grow it to a large trading account. So before we get started, you will need a strategy, right? If you're going to be trading, you're going to need a strategy. So I have a video that I'll link in the description below where we go over a very simple strategy that you can implement, and that can start you on your trading journey. And you can implement that strategy. That's not my advice. Do everything at your own risk. You can implement that strategy and actually trade your small account with that strategy, and that way you'll be able to actually trade in the markets rather than consistently lose money. Because if you're going to grow an account, you need to at least be making some money, right? You can't be losing money. So that'll be in the description down below, and you can check that out before watching this video because you will need a strategy. So a lot of people, specifically on YouTube, will tell you that when you have a small account, let's say $1,000, you want to flip this account. They tend to use the word flip. Now, that is, in my opinion, not the best way of trading, because when they say flip an account, it tends to mean to double the account, triple the account, when in actuality, doing this is pretty hard, at least doing it in a small time frame. When you say flip, let's say you're flipping a house, you tend to flip a house over a pretty short period of time. It's a quick money grabbing thing, right? You flip the house, you make a quick profit, and you go on your way. Well, in trading, it's a little bit different. It's much harder to flip things, okay? That's not how trading works. You're not going to be flipping things like you're flipping houses. Because when you're trying to double or triple your account in a small time period, this implies that you have to be taking a lot of risk. Either you're going to be taking a lot of risk per trade, or you're going to need the best strategy on the planet. And that's not probable, right? We want to stick with the probabilities. The odds of you finding the best strategy on the planet so that you can triple, double, quadruple your account with minimal risk is really low. So now let's get into the actuality of how you can grow an account without having to take on a ton of risk. Oh, and let me just clarify one thing. The reason why you have to take a lot of risk when you're trying to double or triple an account is because to double or triple an account, you need to have a lot of size, right? So the amount you trade needs to be high. So if you take losers on a high amount of volume, right? If you're trading like 1 lot, 2 lots, 3 lots on a $1,000 account, okay? Every single pip, right? Every time the price moves, it's going to be losing a lot more money. It will be making a lot more money too, but odds are you're going to blow your account. You're going to lose too much before you actually can make that extra tons of money with trading the bigger size. So that brings me to the actual secret into growing a small account is to trade smaller size, which seems counterintuitive, but it'll all make sense in a little bit. So instead of trying to double or triple your account in a short period of time, you're going to want to try to aim for a small gain consistently every day. So instead of doing 100% I just realized instead of trying to do 100% in like a month, you're going to want to do, let's say, 1% every day. So this is every month. This is every day. Now, why is that? You're going to say, well, that's only $10 on a $1,000 account. I don't want to make $10 a day. Well, there's something that makes this feasible, and what makes this so powerful and makes it almost the secret to growing a small account, and it's called compound interest. So when you're trading and making 1% a day, it doesn't seem like a lot at first, but when we get into the math of things, it actually is a huge amount of money over a long period of time. Okay, and really not even that long of a time, right? So we're going to get into the math right now, and we're going to show you exactly how a $1,000 account can grow if you can make tiny gains consistently. So here we have a compound interest calculator. So ignore this. I'll explain what each one of these represent. So let's say you have a $1,000 account and the annual addition is 0. So annual addition just means how much you're going to put into the account after the initial deposit, right? So you're just going to put in, you're not going to put in any extra money. And years to grow simply means how many times is the money compounded, okay? So how many times the money is compounded is the key to this, okay? So years to grow, ignore that. This isn't years. This is going to represent how many trades we take, okay? So let's say we take 500 trades, okay? So we're going to be taking 500 trades, and each one of these trades we're going to try to average about 0.75% gain, and that's going to represent our interest rate, okay? So we're going to take 500 trades, and on average, we're going to gain 0.75% on these 500 trades. All right. Now, let's hit calculate and see what happens. So you can see a small account, 1,000, after 500 trades, averaging a 0.75% return on per trade, results in a big account. Eventually, right? So it depends on how long it takes you to make these 500 trades. Could be a year, could be 5 years, who knows? But $1,000 has the potential to grow into a pretty large account pretty quickly. And the more you compound the money, so the more trades you take, the bigger the amount gets. And it's an exponential growth, okay? And that's the secret behind trading a small account, is you want exponential growth by trading small percentages every single day. Now, the reason this works and the math behind it is this. When you're trading and you make one good trade, okay, let's say 1%, right? And look at that number. So when you're making 1% on a trade, your account grows, right? It grows to $1,010. So you made 1%, so now you're at $1,010. Well, now this 1% represents a larger number than the previous 1%, right? So if you're making 1% on an $1,000 account, you're making $10, and your account goes to $1,010. Well, if you're making 1% on a $1,010 account, now you're doing 1% of 1,010 rather than 1% of 1,000. Okay? Hopefully that makes sense. But basically, this number, although it remains at 1%, the actual cash value of that number grows as the account grows. So if you get up to a $1,500 account, this 1% no longer represents a $10 gain, it represents a $15 gain. And you can see how that compounds, okay? The more you grow your account, the faster your account grows. So if you go to a $2,000 account, 1% is no longer 10%, it's no longer 15%, or no longer $10, it's no longer $15. Now 1% is $20, right? 1% of 2,000. So when you do that, and you have many trades, okay, you need a lot of trades. That's the key to this is time. Okay, so you take a lot of small trades over a good amount of trades or a good period of time, and the more you do that, the more your account will grow, and the larger the monetary value or the cash value of this percentage will become. And so the compounding of your account is what lets you start off with $1,000 and turn it into absurd amounts like this. Now, obviously, this is very hard to do. I'm not going to say that this is easy. This is extremely rare to turn your money into this. But even if you turned it into $10,000, that's still a crazy return, okay? And you could easily do that. Let's see what happens at 100 trades. So you see how there's a large difference there? Now it's just 2,000, but as soon as we put in like 200, it's an exponential growth. Watch, now we put in 300, exponential growth, 400, exponential growth. So your growth speeds up the more trades you take. So it take you about 250 trades with a $1,000 account to get over $10,000, making about 1% per trade. So it's this compounding and the growth of your account over a steady period of time that allows you to make large sums of money from small sums of money. Now, why can't you do this risking 10%, 20%, 50% of your account? Well, that now comes into probabilities, which we're going to go over right now. So here we have something called an equity curve simulator, and we're going to simulate our trading. Okay, so we're going to have a $1,000 account, or 1,000 euros, or yeah, 1,000 euros, $1,000, whatever, it doesn't really matter. We were winning about 60% of our trades. Okay, we're going to have a 2-to-1 risk to reward, so that just means we're winning twice as much as we're losing on average per trade. We're going to take 500 trades, and we're going to risk just 1% of our account. So let's run that simulation, and you can see that it's a nice, smooth growth. Okay, this is nice and smooth, straight, pretty much almost straight up line. If we look at the statistics, the most we lost at a given time was 7.8%. Okay, so pretty good results there. Now, this is when you're risking small amounts, right? You're trading a small account and you're winning small amounts consistently. Now, what were to happen if we were to put in a number like 20%? Now we're risking 20% per trade, okay? That's how much we're risking per trade, not how much we're gaining, okay? So on average, we're risking 20% of our account per trade. Now let's start the simulation there. And you can see, even though the graph is still going up, look at our max drawdown. Okay, so this is the most we lost in one given losing streak. 86% of your account gone. So even though the price, we still kept going up, can you handle 86% drawdown? 86% of your account gone. Statistically, through this simulation, 86% of your account is likely to be gone in a given time. Now let's take that number up to 50%. Now look at how much our drawdown is. 99.2%. Okay, so 99.2% of your account is statistically likely to be lost trading in this simulation. Okay, so that's the risk of doing large positions on single trades. You need tiny positions on single trades. Okay, tiny trades, tiny positions. Okay, so you can imagine if you're trying to make 100%, you're trying to double your account, triple your account, quadruple your account in, let's say, a week. Well, you're not going to do that risking 1%. You're not going to do that risking 5%. You're going to have to be risking like 20 to 50% of your account in order to make 100 to 200% of your account, right? And like we saw, risking 20% of your account is likely to lose you 84% of your account at one given point. Okay, and let me tell you, that is not easy to swallow. All right, and then 50%, of course, again, there's 50%. You eventually lose 100% of your money. Okay, so hopefully this video was helpful to you and showed you the key to actually growing a small account. Right, that's the whole point of the video. So hopefully this was helpful, and you took away the key learning lesson here, which is trade small amounts consistently over a given period of time, and you can turn small accounts into big accounts. So if you're not already subscribed, please subscribe down below. Turn on the bell notifications, and if you're not already in the Discord, join the Discord. It's in the link. It's a link in the description down below as well. And comment and do all that jazz, right? So thank you guys for watching, and have a good one.